name is Stephen KADDUMUKASA. I work with the Insurance Regulatory Authority of Uganda as a manager, supervision. As you are aware, Insurance Regulatory Authority is a government agency that supervises, monitors and sets standards in the insurance industry. It is put in force by an act of Parliament, and we are under the Insurance Act of 2017. Motor insurance is basically an insurance policy that covers all motor vehicles or motorcycles against any potential risks that is likely to arise and cause a financial loss. There are different types of motor vehicle insurance, or there are different types of motor insurances in the industry. And if I may talk about them, we have basically three that I would mainly concentrate on. One of them is the statutory motor third party, which basically looks at the other party using the road. Then we have a motor third party with property damage. This one brings in the aspect of property damage in case a motor vehicle or a motorcycle destroys some other person's property. Then we have a motor comprehensive policy. Basically, this is referred to as the all-risks policy for a motor vehicle that covers accidental damage and total loss in terms of theft, and it basically looks at the entire motor vehicle. Yes. And when we talk of why it is important, motor insurance is basically important because it assures or gives a peace of mind to a motor owner that in case of any losses that may arise and cause a financial loss, the insurance company that has given or has provided this policy is able to reimburse the policy holder of this particular motor vehicle. Yes, there are several companies in this industry, and these companies have several products that they provide. But basically, when you move in the industry, you'll find that all companies will provide these three major motor policies that I'm going to talk about. One of them is the motor third party, that is the statutory, that is put in force by the Act of Parliament, which is the Motor Third Party Act that was passed in 1989. Then we also have the Motor Third Party Property Damage. This one basically enhances the motor statutory third party by including a provision for third party that in case a person hits some other person's property, then this insurance is able to reimburse the property or the owner of the property. Then we have what we call the motor comprehensive insurance. This is basically the all-risks policy, and it covers the entire vehicle in terms of accidental damages, in terms of theft, and in terms of total loss. As I mentioned, that we basically in this industry have three types of motor insurance policies, and I'll basically start with the motor statutory cover. This is a basic cover that was put in place by an act of parliament that was passed in 1989, and it is enforced by police. No any driver can put a vehicle on the road without this kind of policy in place. It basically has three components. It has three parties. The first party being the owner of the vehicle. The second party is the insurance company, and the third party is the other person using the road. It is basically put in place to protect the other person using the road, and this is the third party, that in case of any injuries to the pedestrian or the third party, then the first party is able to pass the liability to the insurance company, which is the second party, to reimburse or to pay off a claim that is caused by the first party. So basically, it covers the other person using the road. Then we have motor third party property damage. Motor third party property damage basically enhances the motor statutory third party by putting a component of property damage. Here, property damage is covered. You may realize that under motor third party statutory, the coverage only is basic, and it only looks at bodily injury and death. However, for property damage, the cover is able now to cater for any damages that are made onto one's property. So it enhances the motor third party statutory to include the component of a motor third party, a property damage aspect. We have three types of motor insurance policies basically in this market. One of them is the statutory third party. This one is put in force by an act of parliament that was passed in 1989. It basically covers the other person using the road against bodily injury and death. It involves three parties, and that's why we call it a third party. It has the first party, which is who is the owner of the vehicle. Then it has the second party, who is the insurance company. Then the third party, that's the other person using the road. And in this situation, the first party passes over liability in case of any losses to the second party, which is the insurance company, so that in case a motor accident occurs and probably there is death or bodily injury, the insurance company takes up the liability and is able to reimburse the third party. Then secondly, we have an enhanced version of the motor statutory third party with a component of property damage. Here, we are including property damage that in case some property is lost during an accident, the owner of the property is able to be reimbursed. Remember, for the motor third party, we only look at death and bodily injury, whereas for the second class, that's motor third party property damage, we have a component of property that in case of any losses of property, then this insurance policy is able to reimburse the property owner. Then thirdly, we have the motor comprehensive cover. This basically covers the motor vehicle against total loss in terms of accident, and against total loss in terms of theft. It covers the vehicle against fire. It covers the vehicle against partial damages in case a car is involved in an accident and it is able to be repaired so that it is back on the road. So basically, it is an all-risk cover for a motor vehicle or that is being used on the road. Basically, a motor comprehensive insurance cover is an all-risk cover that covers the entire vehicle against total loss in terms of accident, in terms of theft, and in terms of fire. It also covers partial damages in terms of accident. If, for example, a vehicle is involved in an accident and it's a total write-off, then the insurance company will be able to reimburse the owner to full capacity. If the motor vehicle is involved in an accident and is repairable, then an insurance company will cater for the repair costs. Then, if there is any loss in terms of property, then the insurance company will now be able to cater for the property that has been damaged by this vehicle. A comprehensive insurance cover includes motor third party as well. So when you take up a comprehensive insurance cover, you don't need again to go and purchase motor third party. Motor comprehensive includes third party as well. So basically, it is a very good package that enables the owner of a vehicle to enjoy both property damage, statutory, and the accidental and total loss package that are provided for in there. The motor insurance policy is valid from the time, from the inception date to the expiry date. When I talk of inception, this is the day when the policy is effective, and the expiry is the day when the policy expires. So the motor policy will run from the period when you sign on the policy and when the policy expires. Usually in several industries, we've noted that a motor policy usually runs for 1 year. Basically, we call them annual policies. So after 1 year, you are now able to come and do a renewal, and probably to enable you have or enjoy benefits for another year. So basically, in our industry, the motor vehicle policies are annual. They basically run for 1 year. As a regulator, we basically have a mandate of protecting the policyholder, and by protecting the policyholder, we ensure that what is entitled to a policyholder is given by an insurance company. However, there are circumstances where claims are filed to insurance companies, and insurance companies do reject them. I must cite some instances. One of them is when a client files a fraudulent claim. An insurance company will be able or will not be able to pay this claim, basically because it is a fraudulent claim, and a claim will be rejected basically basing on the reason that is fraudulent. Then there are instances where drivers or road users or owners of vehicles will be driving these vehicles without valid driving permit. You know, by law in this country, all drivers or anyone to drive a car is supposed to have a valid driving license. So in case a loss occurs or an accident occurs without one having a valid driving permit, then an insurance company may reject this claim. Then there are instances where drivers may be intoxicated. By this I mean they may have taken substances that influence their capability to manage a vehicle. Probably a driver may have taken alcohol or may have taken other substances. So if an insurance company finds out that the driver who caused this accident was intoxicated, then there is a possibility of this claim being rejected. Then there are instances where there are modifications. Remember, when an insurance company is taking on a risk, they will inspect the vehicle and ascertain the position of this vehicle. So you, as a policy holder, you are mandated to notify the insurer of any modifications. For example, you have put in a very expensive radio, you have put in other accessories that are expensive. You are mandated to inform the insurance company of these modifications so that in case of a loss, the insurer is in the know. So in case you have not notified an insurance company of these modifications, then the insurance company may reject your claims. Then there are unlawful activities that may be involved, that a vehicle may be involved in. For example, terrorism, for example, theft. If a vehicle gets an accident and it is established that it was involved in an activity that is not lawful, then an insurer is at liberty to reject this this claim. Then there are also instances where a policy has expired. Probably a client has forgotten to renew his policy, and at the end of it, this vehicle is involved in an accident, whereas it wasn't earlier renewed. The insurance company will not be liable if the policy has not been renewed. And if a claim is put in and an insurance company establishes that this policy has not been renewed, then the insurer may be at liberty to also reject this claim. As we sign on these insurance policies, there's what is regarded as a policy, as a proposal form. And this proposal form is a document where the person taking on insurance will provide all details. Insurance company will ask details of what kind of risk they are taking on. And in most cases, there is a provision where they ask that whether this vehicle is going to be driven by other persons. So in this case, the insured will indicate yes. And if you have indicated yes, then the insurance company will have to pay. So long as this person who has been driving and who has caused this accident, you have given him full rights and you are aware that this person is driving your vehicle, then the claim will be payable. It is our mandate to protect the policyholder, and through claims, we as a regulator, we are supposed to see that insurance companies pay these claims promptly. So, as a regulator, we have come up with guidelines. These are claim guidelines, clearly stipulating the timelines in which claims are supposed to be paid in. For a motor vehicle policy, that is, as the Insurance Regulatory Authority, we have come up with guidelines. These are claim guidelines, clearly indicating the timelines in which claims are supposed to be paid. And among them is the guideline that provides for motor vehicle claims. For claims that are below 5 million, we expect insurance companies at least to pay these claims within a period of less than 5 days after doing all the documentation. Then for claims above 10 million, insurance companies will need to pay them within a period of 1 week. Those are now 7 days. Then for claims above 10 million, we expect insurance companies to pay, after full documentation, to pay within a period of 15 working days. Although this depends also on the magnitude of the claim, because there are claim processes that may take place. Probably if a claim is big, there is need to carry out assessment by the loss assessor and adjuster. So that's why we are giving high valued claims some bit of time to see that all these processes are taken care of. Basically, a no claim bonus is a claims history that is attached to a policyholder, basing on the number of claims that a policyholder has made. And basically, if the history is not good, then it will affect the price of a motor vehicle policy that one takes on. So claims, a no claim bonus is what is earned by a policyholder when a policyholder has a clean record in terms of claims. If a policyholder has no claims, then the prices or the premium of a policy will definitely go down. Whereas when the policyholder has a bad record in terms of claims, I mean the number of claims that have occurred, then the price will also increase. So basically, a no claim discount or a no claim bonus is a bonus that is earned to a policyholder who has a clean record in terms of claims. And it basically helps in reducing the cost of the policy that the claim has, if a policy holder is a good driver, then you will earn a bonus. What I can say is that insurance is very key to anyone's life, and any person driving a vehicle should be very keen to see that this vehicle he or she is driving has insurance in place, because first of all, as I've mentioned, insurance gives a peace of mind. It puts you back to a position where you were earlier before the loss. So it's very, very important for our population, for all people who are using the roads, to see that they take up insurance, and basically motor insurance, to see that all the